Hello everyone and welcome to Regulation US taxation session on individual taxation. My name is Parag Kulkarni and I am going to be your host for next session for 15 minutes on individual taxation, specifically on filing status. In individual taxation, we are going to start with concepts and big picture. Gross income. That's the all sources of income which comes to you minus adjustments. Reducing adjustments from gross income will give you AGI, that is adjusted gross income. From AGI, you will deduct standard deduction, usually called as a freebie. Everybody is entitled to standard deduction and hence it is free to everyone. So from AGI, you will reduce either standard deduction or itemized deduction. If itemized deduction is larger than freebie, then you will use itemized deduction. And then comes exemptions. These are exemptions for either yourself or for your spouse or any other dependents. There are three options and you can claim for all three. And then it will equate taxable income. From taxable income, you will get two types of taxes. One is a regular tax and another is AMT, alternative minimum tax. This will be our federal income tax. Then you will subtract tax credit like self-employed tax credit or social security tax on IRA, qualified plans, etc. Then you will subtract your payments such as withholding on your paychecks or excess payment of social security, and then you will get either tax due or refund. That is, either you owe money or you will get a refund. We are not going to cover adjustments in this 15-minute session. Adjustments are also known as deductions to arrive at AGI. Itemized deductions are considered as below the line items. Now let's look the form 1040, which is filed by an individual, and this is the form for US individual income tax return for year 2013. I am showing you this particular form to make you acquaint with US tax forms. After giving you routine details, you need to tick on your filing status. Can you see here filing status? Yes. And there are 5 different types of status which you can use to file your income tax return. Don't worry, we will go into detail after looking in this form 1040. Let's move to next slide. After concluding on your status, you need to claim exemptions. Now here you can see exemptions, as I stated earlier, are under option A, B or C. That is for either yourself, for spouse and for dependents. Okay. And then comes the key part of the return. Yes, this is the key part of your income tax return because it's all about your income. Line items 7 to 21. Can you see this? 7 to 21 give you different types of income and 22 is the total of line items 7 to 21. That's the total of your income. It includes wages, salaries, taxable interest and even details of tax exempt interest. Though it is not taxable, you need to provide details in the inner column. Yes. And then this line number 22 will add to your gross total income. Once you get gross total income, let's move to next slide. After computing your income, you will now compute adjusted gross income by deducting some of the adjustments. And you are right, from line number 23 to line number 35, you will find different adjustments. Line number 36 is the addition of these adjustments And line number 37 is, as you can see, adjusted gross income. Great. Let's move to next slide. In this section of Form 1040, we will consider taxes and credits. Can you see line item 45? Yes, this is alternative minimum tax. And the bottom of the section will cover other taxes such as self-employment tax, social security tax, etc. The next section is your actual payment of taxes. Here, you will write the details of the payment which you are making. To conclude, you will either receive refund or you will pay taxes. You and your spouse have to sign here, and if you have taken the services of paid preparer, then even he must sign. Okay folks, now we are well versed with the structure of Form 1040, and here we are ready to jump into the filing status of an individual. Let's make a move into some fundamentals. When to file income tax return and when to pay your taxes. The due date is April 15. You could get an extension up to 6 months and it is automatic until October 15. However, with either extension, the due date for payment remains the April 15. Hence, extension is only an extension for paperwork and not for the payment of taxes. The payment is still due, and if you fail to make payment or a reasonable estimate of the payment, then you will be subject to penalty and interest. Yes. Alright, there are 5 different status to file as an individual. The first one is single, second is joint return, and here you can see for both these types I have written use the end of the year test. In just a while we will understand what this particular test is. The third type is married filing separately. Fourth one is qualifying widower, usually called as surviving spouse with dependent child, and the last one is head of the household. Let's look into different file status one by one. Single. So who is a single? And who can file a return as a single? If you see this previous slide, there are different 5 statuses, and those people who don't qualify in this 2, 3, 4, 5 can file a return as a single. In short, single is a residual category. It means any taxpayer who does not qualify for one of the other filing classes must use the single status by default. But in how to conclude whether you are single or not, you have to use the year-end test. See this. The December 31st is the date which decides your status. Tell me, are you single as of December 31st? If you are, then you can file return as a single. That's the first option, single at the year end. Or if you are legally separated, in short, divorced during the year, then you have to file return as a single and you cannot file return as a joint return. Okay, I know we have to take one question on this. Let's assume you are married throughout the year but unfortunately divorced 3 days before year end on 28th of December. Are you single or can you still file joint return? Oh, see the date which decides your status. It is December 31st, not December 28th, not December 27th, only 31st December. As of 31st December, you are legally separated and hence you can file return as a single. Let's take another example. You meet someone in a park, someone very beautiful, and then you had really good conversation and then you fell in love with her, and then you decide to marry. It was 31st December, and somewhere around 9 o'clock in the evening you married. As of 31st December, what is your status? For whole of the year you were single, but as of 31st December you are married, and because you are married as of 31st December, which decides your status, you are not single as of 31st December, so you'll be considered as a married. Now married people can file a joint return or they can file a separate return. Let's first look into the second type, that is joint return. Again here we have to use the end of the year test. So basically, who can file a joint return? Those who are married at the end of the year as of 31st December. They are either living together or they are living apart, but they are married as of December 31st, and then they can file joint return. Now understand, those who are legally separated or divorced cannot file joint return because they are no more married, and then they have to file return as a single. Now let's take this example. What if spouse dies during the year? Let me ask you another question. Assumes Mr. A's spouse dies during the year. My question is whether Mr. A ever divorced in that particular year. The answer is no. Though he was single, he was married, and he was single not because of divorce or legal separation, but because his spouse died. So can he file a joint return? Yes, that's fine. You can file a joint return even if your spouse died during that particular year. In short, in the year of death, you are able to file return as a joint return. The third status is for those who are married but filing separately. The second status was for those who are married and filing jointly. Separately, they have to report their income, exemptions, credits, and deductions on their own individual income tax returns. Yes, it's very simple. So let's jump into the next category. This category is little complex. Qualifying widow with dependent child. Now, who is a qualifying widow with dependent child? After the death of a spouse, 2 years. That is, let us assume a spouse died in the year 2013. So as of 31st December 2013, a widow can file a joint return. But in year 2014 and 15, if she has a dependent child, then she can file as a qualifying widow with a dependent child. So 2 years after spouse death, not in the year of death, 2 years after spouse death. And then how to know whether she has dependent child or she has not dependent child? To understand whether she has dependent child or not, we need to analyze this particular test. Principal residence for dependent child. The surviving spouse must maintain a household that for the whole of the taxable year was a principal place of abode of a son, stepson, daughter or stepdaughter. Yes, and then you can conclude, yes, you have a dependent child, and if you are a widow, then 2 years after spouse death with such dependent child can file a return as qualifying widow with dependent child, provided you fulfill this particular condition, that you maintain the principal residence of such dependent child for whole of the taxable year. Yes, here is also important. The surviving spouse must also be entitled to a dependency exemption for such individual. If you remember, 6ABC on form 1040 were exemptions for yourself, for dependents and for spouse. So C was for dependents. Here you can write such exemptions in line number 6C to claim exemptions for such individuals. Let's just make note of this. Now this status is available for 2 years post year of spouse death. In the year of spouse death, you are still married and can file a joint return. Let's move on to the last category of head of household. You should always prefer this particular status over qualifying widower with dependent child. You know why? Because for a head of household, you have larger standard deduction and wider tax brackets. Who is the head of household? He is the one who is not married or legally separated or married but living apart for more than 6 months to the close of the tax year. And yes, who is not the qualifying widower, who is not a non-resident. And this fourth condition is important because if you have to be head of a household, you need someone, you need a family, right? You cannot individual, you cannot be single to claim yourself as a head of the household. So you need someone to be dependent upon you. And yes, here are 3 people who can be considered as dependent upon you, and then you can be considered as a head of the household. So the individual who maintains his or her home, that is a household, that for more than half of the taxable year is the principal residence of either of these 3 people, then you can claim yourself, then you can claim that individual as head of the household. So who these 3 people are? The first one is a dependent son or a daughter, that is a descendant. Let's take this example. Example of a divorced mom with a son or a daughter. So legally separated single mom is living with a son or daughter and maintaining the principal place of abode for more than half of the taxable year. Here, not the whole of the taxable year, which was the case in case of qualifying widower. Here, you just need to maintain for more than half of the taxable year. The second type of person is your parent. Are your parents father or mother? They are not required to live with taxpayer, but if a taxpayer is paying for their maintenance for more than half of the taxable year, then it's fine. Still you can claim yourself as a head of the household. Let's take the example of a nursing home. Mr. A's parents are staying in a nursing home and they stay there, they live in that home for whole of the taxable year. And Mr. A maintains, pays fees of maintenance to such nursing home for at least half of the taxable year, for more than half of the taxable year. In such case, Mr. A can claim himself as a head of the household. The third type is dependent relatives, and dependent relatives must live with taxpayer. Let's take this example. Mr. A is having a girlfriend and a girlfriend is living with Mr. A in a living relationship, and Mr. A is taking care of her all expenditure, including her university classes, including her beautification, including her petrol for car and all sort of expenditure. They live together and her girlfriend calls herself to be dependent upon Mr. A. Now, can Mr. A be considered as head of the household? The answer is no, because you need dependent relatives, not freeloading friends, no girlfriends, no boyfriends. This comes to the conclusion of a filing status. Do you have any questions? I believe we had really wonderful session. Have good life ahead. Thank you so much.